Welcome back to Tax UK, the practical tax channel with another tax tutorial. Today I'm going to be covering how you can maximize your tax refund, and this is for individuals who work in the construction industry under what is known as CIS, which stands for Construction Industry Scheme. Construction industry workers working under this scheme are usually taxed slightly differently to other self-employed individuals, and usually they'll have 20 or even 30% tax deducted before any payments are made to them by contractors. Typically, this simplified approach results in too much tax having been deducted, and come the end of the tax year on the 5th of April, anybody working under CIS will be rushing to submit their tax return, which will often trigger a tax refund for any overpaid amount. That's why CIS workers will usually be submitting their returns in April or May, whereas most other self-employed individuals will wait until December or January, right before the submission deadline. So in today's video, I'll be giving you some ideas of how accountants will maximize tax refunds for their CIS clients simply by applying HMRC's own guidance. Before we do get into it today, if you do find this type of content useful, then don't forget to like the video for me and subscribe to the channel for more how-to tax videos, from how to claim employment related expenses through to how to set up a limited company in the UK. You can also check out my other channel, trader_UK, for lots of investing related content. And if you require video assistance, which we usually do via Zoom, then you can book that using the details in the description below. Now, let's get into today's video. Now, before we jump into the numbers, it is important to understand that not every CIS worker will receive a tax refund, but I would say the majority do. And because most workers are due a refund, which can be in the thousands of pounds, most people will rush to get their returns submitted as soon as possible so they can then use that money to book a holiday or buy some new tools. My recommendation is don't rush. In this situation, you are owed money by HMRC, and if you rush, you're going to cut corners and you won't reclaim the full amount that is available to you. It could be that your maximum reclaim amount is £1,500, but because you rush to get something in, you end up only receiving £1,200. Now, lots of people will be happy with a £1,200, but really you shouldn't be, because you've just thrown away £300. Take your time and make sure you get everything that is owed to you. The way that you should be looking at this is the lower your profit, the higher the reclaim, the bigger the refund. Lots of people struggle to get their head around this because, of course, you want to make as much money as possible. So this sounds a little bit backward. But when it comes to tax, we want to report the lowest possible profit figure. Of course, without breaking any rules. Broadly speaking, there are two ways to reduce a profit figure. The first is to decrease your turnover, and the second is to increase your expenses. Now, we can pretty much rule out decreasing your turnover because the tax year in question has already finished. You've already done the work, so it's going to be quite difficult to change how much you've invoiced without breaking the rules. And that leaves us with increasing the expenses in order to reduce that profit figure. And although you might think that the same would apply, the tax year is finished, so I can't increase my expenses now, that's not always true, because there are plenty of expenses that you will have incurred that you might not have known were allowable, but they are. So we're not so much increasing our expenses, but we're searching through them to make sure that anything that is allowable has been included. And the best way to think about this is that for every £1 of additional expense you can legitimately include, a basic rate taxpayer would usually save themselves 20% tax and 9% national insurance. So that's an additional 29 pence on your refund for each additional pound of expense. A higher rate taxpayer would save 40% tax and then 2% national insurance. So that's 42 pence of additional refund for every additional pound of expense. That's based on the rates for the 21-22 tax year as well. We already know that national insurance rates are higher in 22-23, so that would make the savings even greater. So it's really worthwhile doing this. Now, I would tackle this by following 3 steps, and I'm going to show you on screen. Step one is to go for what is the low hanging fruit. Hopefully, you've done something like this already, but if you haven't, then it's a case of going through your business bank account and pulling out any expenses that relate to your business between the dates the 6th of April 2021 and then the 5th of April 2022. Now, this assumes that you are using a simplified method of accounting called cash accounting, which is typically used by small sole traders with a turnover under £150,000. You can see here that I've simply gone through the bank statements, I've listed out any business transactions, and then I've broken it down by income and by expense. Now, the different headings that I've used here, these are the same headings, the same categories that HMRC use if you want to provide a detailed breakdown of your expenses. Now, technically, you don't need to do this, but you don't need to actually go into this much detail, but it's going to be quite useful for a few adding in a few extra expenses later on. So we will go with the added detail. Now, to do this, all of this should only take 10 or 15 minutes, depending on how many transactions you actually have. But I would recommend it's always going to be easier if you have a separate business bank account rather than doing everything through your own personal account. So if you haven't done that already, I would recommend for next year getting yourself a business bank account set up. Now, step two, after you've entered all the business transactions on here from your main bank account, is to review other places that business transactions might be hiding. Throughout the year, it's highly likely that at some point you didn't have the right card with you, so you use your own personal bank account or personal credit card to pay for something, or you may even have paid something in cash. So do a quick review of personal accounts and personal credit card statements for the same period, and then add in anything that relates to your trade. For cash expenses, it's going to be a little bit more difficult. You'll need to go back through any receipts that you might have and any invoices and look for any that were paid cash and then add those into your spreadsheet. Like I have at the bottom here, I've identified 3 more transactions which weren't on my business bank account that I paid potentially on credit card or in cash, but they relate to my business, so I've added them on at the bottom here. This activity alone is bound to identify a few missing transactions. And remember, every £1 will result in either 29 pence or 42 pence in your pocket, depending on the highest rate of tax that you pay. Step three is then when you're going to make the real savings. It's time to think about expenses that you have incurred privately, where some of the cost could be attributed to your business. Now, you need to be a little bit more careful here. You can't just say, well, 50% of my mortgage should be paid by the business. There are usually guidelines on what can and can't be claimed, but it's just a case of finding HMRC's guidance and then applying it to your situation. So I'm going to give you a few good examples to get you going. The first example we have here is working from home or a home working allowance. Now, this is an easy win if it applies to your situation. And the guidance from HMRC here is very clear. You're going to find this page by searching gov.uk simplified expenses if you're self-employed. And what you'll see is that you can claim simplified expenses if you work 25 hours or more per month from home. Now, 25 hours per month, which would put you in this top category, is only 5.7 hours a week. So if you do a bit of weekly bookkeeping, if you raise invoices to contractors, if you spend a bit of time at weekends looking online at potential jobs, then you can easily clock up that amount of time. Could you clock up 51 hours per month to move you into the next bracket? I don't think so. That would be for individuals who work a number of days from home each week. But certainly, there would be a very good argument for this category, this bracket right here, which would allow you to claim £10 per week to be included in your allowable expenses. That's £120 for the full tax year. So I'm going to add that expense in down the bottom of my spreadsheet here, and you can put any date really because it's covering the whole tax year. And you can just put home working allowance. And you can include £120 of additional expenses. Personally, I would put it in the column with rent, rates, power, and insurance because typically that's what it's to cover. It's to cover additional costs for power, for gas, for utilities, those types of things. Next up, and I've just added a line in at the bottom for this one, you're going to want to consider your mobile phone and your broadband bills. Usually, you're going to use both your mobile phone and your home broadband for both personal and business use. Now, the advice that HMRC give to calculate this, you can see here a heading for if you use something for both personal or business and personal reasons, for example, your mobile phone, and they actually give the example of a mobile phone here below if you're looking to use that. What they advise is that you actually have to go and calculate how many calls you made for business purposes and how many calls you made for personal reasons. Now, nowadays, because you buy a package and that phone package includes calls and texts and also data and all sorts, it's quite unlikely actually that you'll actually sit there and go through your bills working out which calls were for which. So what most people tend to do is actually apply a percentage to this. So if we head back to our spreadsheet, if I had a £400 per year mobile phone bill and I made a calculation and expected that 50% of the calls I make and 50% of use of that phone related to my business, then I could just put an adjustment in here for £200. I would need to keep a record of how I'd calculated that, and we can add that in here just in case HMRC were to ever question this. It's good to document how you've come to that conclusion. You can also potentially make a similar adjustment for home broadband as well. Again, assuming that you are using your home broadband for business reasons. So again, maybe you do a bit of work at the weekend and in the evenings, and maybe you decide that 50% again is a suitable figure to or suitable percentage to apply. We'll put the same calculation, 50% business use, and we'll document that down here. And again, total up your annual bill, divide it by 2 to give you the 50%, and then add that adjustment here. Now, the final one that we're actually going to look at today is a big one, and where the first two have resulted in what would be small tax savings, but tax savings nonetheless. This one can result in hundreds of additional pounds in your pocket. We're actually going to look at motor expenses. Now, typically there are two ways to claim for motor expenses, and my advice is to consider which way is better for you. The first way is to claim the actual expenses that you have incurred, which can include the purchase of the vehicle. It can include the maintenance of that vehicle, such as MOTs and repairs, and it can also include the running of that vehicle, which is usually what you spend on petrol or on diesel. And you can see here, that's the method that I've actually applied. I've claimed the actual costs incurred, all my expenses to Tesco's, and various other places. The second way is to use simplified expenses and apply a mileage rate. Now, you might be familiar with this and these rates. You can see that the current mileage rates are 45 pence for the first 10,000 miles and then 25 pence per mile after that. Under this method here, you cannot claim for the other expenses, such as the purchase of the vehicle or the maintenance, as those expenses are already factored into this rate here. But it is extremely important that you select the correct method for you. You shouldn't be switching between the two on a regular basis, but if you do feel you're not benefiting from the correct method, then it is actually okay to switch once in a while, providing it's justified. Now, I'm going to show you a very quick example of why this is so important. So in this example, I have a vehicle, it's my personal vehicle. It's not owned by the business, but I do use it for the business. So I drive to work, to different sites, different contractors every day. Um, and I fill up that vehicle with fuel. I claim the cost of that fuel. So you can see it going through here. Every week I put fuel into that vehicle. What I've also done, I've also claimed here the MOT costs, some of the running costs of this vehicle. So if you total that up, we've got 1,370 plus the £350 MOT, £1,720. That's using the actual cost. Now, what's important to point out here, I have never claimed the cost of that vehicle, the purchase price of that vehicle, as a business expense, as a capital allowance. And because I haven't done that, I'm entitled to use either method. I could actually use the actual cost, like we've just calculated, or I could use the mileage rate, the simplified mileage rate, which we looked at a second ago. And again, I'll just switch across to this, and you can see the rates, 45 pence and 25 pence here. So I'm entitled to use either of those. If I had at some point claimed the cost of the vehicle, then I'm not entitled to claim either of those. I would have to use the actual cost, which is what I've done here. Okay, I'd have to claim this figure here. Now, in my example, I'm entitled. So let's compare. Let's compare. And if you work out how many miles you've done. That's quite a simple calculation. How many miles during the tax year? You work out the sites that you travel to, the mileage from your house to the site, and then back again, and you work that out for the whole tax year. So if I know I've done 10,000 miles across the tax year, then you can go and apply these rates to that calculation. So the first 10,000 miles are at 45 pence. So if I switch back across, I can apply that calculation at the bottom and we can compare the two. So equals 10,000 times 45 pence. And you can see the huge difference. So you're looking at £4,500 if I claim mileage, and only 1,720 if I claim the actual cost. Now, the difference between those, it's huge, and it's going to result in a massive tax saving, 2,780. Okay, 2,780 of additional expenses. And if I'm a basic rate taxpayer, do you remember earlier in the video we said a basic rate taxpayer will typically be refunded or save 29 pence for every pound of additional expense that goes through. So you can apply that here. So that would result in an additional refund of £806. Additional refund of £806. If you're a higher rate taxpayer, then remember it was 42 pence in the pound. Okay, so you could apply that here, 0.42. A higher rate taxpayer would get an additional refund of £1,167. So we're talking about big numbers here, big savings. Now, in this situation, of course, what I want to do is claim that £4,500. So you would have to make an adjustment. I'm going to get rid of this here, and I'm just going to add in down bottom an adjustment for mileage. So we'll put mileage, and again, just keep a record of what you've actually claimed. Now, when you're claiming mileage, you should really keep a mileage log as well with the date, ideally the postcodes that you've traveled from, and then a cumulative total of the mileage that you've covered. But something like this would also assist if HMRC were to ever ask questions. And again, I'd want to add in that £4,500 here. I'm just going to update my formula because it's not picking those up. But just remember, if we're adding in those additional expenses, that 4,500, we cannot as well claim these expenses. So we would need to remove those. If you decide you want to use the mileage rates, then these would all need to come out. But obviously, it's beneficial for you in the long run and would result in a larger tax refund. I'll also take out the MOT. So we're disallowing those, but we're replacing them with a larger expense of £4,500. Now, before I actually switch across to the Government Gateway portal and show you where you would actually submit these numbers in order to trigger the refund, I just want to point something out. So in this example, I've been through the bank statements and I've pulled the figures from there and I've entered the income figures here. You can see I've entered a column for income, nice and straightforward. But if you work under CIS, what you'll know is this amount that you receive in your bank account isn't the gross amount. This is the net amount. Okay. This is after the contractor has actually deducted tax. And they would normally deduct 20% tax from all of their subcontractors. Potentially, they can deduct 30%. If you're not a registered CIS worker, then they'll normally deduct 30%. But for anybody who is established and got a CIS card, I believe you have, then you'll have 20% deducted. So when you're calculating your income, it's actually better to ignore what's on the bank statements. And I would actually, on each of these dates, I would go back to your receipts or your pay slips, as it were. They're not really pay slips because you're not employed. But if you go back to your statements from the contractors, then that will detail the gross amount. So in most cases, what you'll see is that it's actually going to be 20%. You'll have to gross these up. You can gross them up by dividing by 80 and then multiplying by 100, and that would give you the gross amount. Okay, that's how you gross up your net figure. Okay, because remember, if you had 4,000, let's do the calculation below here. If someone paid you 4,000 and they take 20% off, you're only left with 80% of that figure, which comes back to hopefully our 3,200. Okay, so just bear that in mind. When you're grossing these figures up, that's usually the calculation. But even better than that, you're actually better off going back to your statements, from your slips from the contractors, and you can replace these figures. Okay, you can go through and replace them with the gross amounts. In this case, I'm assuming that they're 4,000, but like I say, usually better to actually go through and pull out the actual figures from the statements, just in case there's anything in there, any adjustments that you weren't aware of. Otherwise, if you're just grossing up like I'm doing here, then you could potentially get something wrong. Okay, but it's just something to be aware of to make sure that you include the right amount of income. So I've just gone through and grossed up all of my income. You can see I've put a little tally at the bottom here, which will be quite useful when we're actually submitting the return, so we can check our profit figure. And you can see a simple calculation here. So our total income agrees to our grossed up figures throughout the tax year. Our total expenses have all been summed up from here, leaving us with a profit before tax is applied of 40,973. So now that we've actually pulled together our numbers and we know our profit figure, I'm now going to show you how you'll actually enter these details on a self-assessment tax return. Don't forget, on the channel, you'll be able to find a full-length tutorial of how to submit the full 21-22 self-assessment tax return. But for the purposes of today, I'm just going to show you the main entries where you're going to declare that you're self-employed, where you're going to enter your income figure, your expense figure as well. Okay, but if you do need more guidance, how to answer the general questions that get asked throughout a self-assessment, make sure you check out that full-length video that you'll find on my channel, and of course, like and subscribe. Now, the first entry that you actually need to make comes when you're tailoring your return on page 1 of 3. You can see here it's asking us questions to identify what types of income we have. So if you were an employee as well, as in you had PAYE employment where you get paid every week or maybe every month and you get a pay slip for that, then you would tell them at the top here. In our example, I'm going to say no. Self-employment or CIS workers fall under self-employment. So if that's your only source of income, you would declare that you have that income here. Now, you only need to declare where your turnover from all your self-employments is more than £1,000. Anything under that, you don't even need to tell HMRC, and you would say no to this. If you did have multiple self-employments, again, you would let them know here, but for most people, it will tend to be one. I'm just going to enter one of my self-employments here. And then for the rest of these are different types of income, so I'm going to say no. So now I've tailored my return. I've answered the 3 pages of yes, no answer questions. And now I'm actually going to fill out the return. So you can skip straight to your self-employment. So mine is here. And then this is where we'll need to provide details of our income and our expenses from self-employment. Now, the first question, they will ask you if your turnover is more than £85,000. The reason for that, if you turn over more than £85,000 in this tax year, then you would normally need to register for VAT. That's the threshold. So that's what they're trying to find out there. So I'll say no to that, because if you remember my turnover figure, after it's been grossed up, remember we had to gross these figures up, and my gross turnover is £48,000. You'll then need to inform HMRC if any of these tick boxes apply to you. In most circumstances, it will be no, but if you work through them, again, apply that to your own situation. But what you'll find at the bottom is that none of these apply, and 99% of people will normally tick that box. And then we need to provide a little bit of information about our business. So if you're working under CIS, you're likely to be a plumber or an electrician or carpenter, whatever it might be, a few words or a maximum one line to explain what your business actually does. I'll put plumber in here as our example. You can then provide a postcode for your business if you like, but it is optional. Has your business name, description, address, or postcode changed in the last 12 months? We'll say no to that one. If you've only just started working under CIS, you wouldn't need to let them know here. You're not saying that it's changed. This is only if you've been working and then you've changed some of the details for your trade. If this is your first year of trade, though, under CIS, as in you started trading after the 5th of April 2021, you need to let them know here, and you would enter the date. The reason you usually enter that is some of the tax that gets applied, or it's actually national insurance, class 2 national insurance, which is about £3.05 per week. That will only apply from when you started. So if you started halfway through the year, they'll only charge you for half a year's worth of class 2 national insurance. If you started at the beginning of the year, then they'll charge you the full year. So that's why they're asking that here. Did your business cease to trade? So I'm going to say no to this one. But if you did cease to trade during the tax year, this is your way to let HMRC know. And if they deem fit that you don't actually need to submit a tax return anymore because you stopped trading, then they'll stop sending them out to you or stop requesting that you fill them in. If you have another reason, maybe you've got high employment income or rental income, then they can still continue to ask you to complete one. But for most people, if CIS is your only income and you cease trading, then you just let them know here and they'll stop requesting that in future. The date that your books or accounts are made up to. Now, I've made this clear in the past. Most people, if you want to keep things simple, the easiest date to use is April 2022, the end of the tax year, last day of the tax year. Or if you want to keep it to a round date to the end of the closest month, then you could go to March 2022. Anything different to that, and it becomes a little bit more complicated, you need to use opening and closing year rules for the self-employed, which will often require the assistance of an accountant or certainly a lot more research. So if you just do 5th of April 2022, then it's nice and easy. You're just going to include all transactions between the 6th of April 2021 and the 5th of April 2022. We're then asked, did you use the cash basis, money actually received and paid out, to calculate your income and expense? I mentioned this earlier in the video, and again, it's typically used by smaller self-employed individuals, turnover under 150,000. If you want to know more about it, they've got a short video below, and there's a link to that. But basically, it means that you can just calculate your income and your expenses directly from your bank statements. There is another basis that you can use, which is a little bit more complicated, traditional accounting or the accruals basis, where you have to account for income and expenses when they are incurred, but when they are incurred is not necessarily when they are paid. For example, if a supplier gives you 30-day terms, you might not pay an invoice until well after the end of the tax year, but you've already incurred it before. So the traditional basis is a little bit more complicated and requires, again, more work. So the cash basis, if you're under 150,000, is normally nice and simple, and I'll use it in this case. There are some restrictions, though. If you're using the cash basis, then typically you're not allowed to claim capital allowances. I'm not going to go into huge detail on this, but if you're a small self-employed individual working under CIS, chances are cash basis is going to be a good option for you. Now we have the option to enter our income figure, so our turnover. We want the gross turnover, and we can take that from here. So we got 48,000 gross turnover, and that will go in the top box here. 48,000 in the top box. Now, I will just point out that you have an option here to enter a trading income allowance. Now, typically, trading income allowance is up to £1,000. So typically, this will only be beneficial if your expenses are under £1,000. In this example, my expenses are £7,000, so it's not going to be beneficial for me. But if my expenses here were £500, then you can actually claim the trading income allowance instead, and you would be able to enter £1,000 in this box, which would then reduce your profit down by more than the 500 expenses. You can only claim one or the other. So you either claim your £500 of expenses or your £1,000 of trading income allowance in that case. In this situation, though, I've got £7,000 of expenses, so I'd be silly to go and claim the trading income allowance. I want to reduce my profit down by 7,000 rather than the 1,000. And then at the bottom of the page, you see we're given the option to detail our expenses by either a single total or by detailed breakdown. Now, I've got both here. When I've set up this summary, you can see I've got single total of 7,027, which is a total of these. Or, like I said, when I set this up, I've actually set this up with very similar categories to HMRC. So if I select as a detailed breakdown and save and continue, what you'll see is we got car, van and travel, we got wages, we got rent and power, which is why I've put in car, van and travel, wages, rent and power. So it's up to you which you use. If you have that information available to you and you like to split it out, then you can provide HMRC with that information by entering the individual totals here. If not, then you're perfectly entitled to just provide the absolute minimum, which would be that 7,027 as a single total. And because we're small self-employed businesses, HMRC don't ask for any more detail than that. We can save and continue. Remember, I just mentioned capital allowances. Now, these apply to larger equipment purchases. If you buy big plant and machinery or vehicles, usually, then capital allowances come into play. However, like I said, if you're using the cash basis, you can't usually claim capital allowances. Instead of claiming them, everything would just go through as an expense. So you still get the same result, but it works a little bit differently. And then you can see here, we've got a net business profit for tax purposes of 40,973. So that's what tax is going to be applied to here. And that agrees back to my spreadsheet here, 40,973. So it's always good just to do that check so that you know you're submitting the right figures. Now, I've just skipped ahead a few pages. And remember, if you want the detail of how you answer every single question as self-employed, go and check out that full video. But here, this is where we're going to detail deductions made under CIS. So the money that your main contractors have deducted from your salary before they paid it. Now, if we go back to the spreadsheet, we know that we've got 48,000 of gross income, which includes that tax figure. So all I'm going to do here is take that 48,000 and assume that my contractors have deducted 20% of that, which would be 9,600 in tax. Again, I don't actually recommend doing that. What I recommend doing is going and finding all of the statements or sort of pay slips that you were given from contractors, and it will all be detailed on there. Because if there are any adjustments, if they have for any reason charged a slightly different rate, then you wouldn't want to miss out on reclaiming parts of that tax anyway. Okay, but 9,600 is the figure that I'm going to use because I know throughout the year every contractor deducted 20% from my gross salary or my gross payment before they paid me, and then they've paid me the net amount at 80%. Okay, so 9,600 is my CIS amount. We then have a page regarding Class 4 national insurance. Now, Class 4 national insurance unfortunately applies to self-employed profits, so it will apply to us working under CIS. This is just checking if for any reason you might be exempt. Now, you don't pay Class 4 on everything, and it's going to align next year with the personal allowance, 12,500 odd pound. This year it's slightly lower than that, I believe. In most situations, you're going to need to pay Class 4 national insurance unless maybe I can't imagine anyone's working under CIS under 16 or over the pension age, maybe. But again, 99% of people will say no to the bottom, which means that Class 4 national insurance will apply. And again, that's kind of what we expected. Class 2 national insurance is also a page here. Now, you don't really need to enter anything on this page in most situations, but it's worth noting. Remember, it's £3.05 per week. If you have started throughout the tax year, if you started trading halfway through the tax year, you won't get paid the full amount. But because I didn't enter a date in the commencing trading box when we were tailoring the return, they've charged me for the full year. So I'm going to pay £158.60 for the full year. Class 2 national insurance is important. This is what entitles you to a state pension. So you want to make sure you're paying this really, because when you reach retirement age, they're going to look back and check, did you make 30 or 35 qualifying years of payments so that you get that full entitlement to state pension. So try and make sure you're paying Class 2 national insurance. I'll also point out that at the bottom of the page, there is an option to pay Class 2 national insurance voluntarily. So if your profits from CIS, from self-employment, were less than 6,500, then it won't normally charge you. It won't normally collect Class 2 national insurance. However, like I said, there are benefits to paying it, even where you don't have to. So in that case, you might want to say yes, and just pay that 158 quid voluntarily, because then it's going to count towards your pension records. In this case, I'll say no because I'm already going to get charged it anyway. Now, the process for claiming a refund, because most CIS workers are going to be claiming refunds, it's changed, unfortunately. Previously, in I believe last tax year or maybe the tax year before, you would always just submitted your return, and if you were due a refund, they would send you a refund. You pop your bank details or your address in, and they'll send out a check or a bank transfer within a few weeks normally. The process has changed. So you can see here, if you are due a refund, do not forget to do this. Submit your return and then log back into the portal 72 hours later, and there'll be a new button there or a link to claim your repayment or claim a repayment. Once you do that and you verify your identity, then your check or your bank transfer will get issued. So don't forget that. That's an important step. Now, I've just skipped ahead to one of the final pages here, so you can see the calculation, and you can see at the top here it's saying total tax repayable to you, which is what we would expect. We would expect a tax refund in this case because we've usually overpaid tax via CIS deductions, and it's £934.35. If you want to see more detail, click on the link to view and print your full calculation, and then you'll see the breakdown. So I had £40,973 of profit, which is exactly what we were expecting, agrees to my spreadsheet. They've deducted the personal allowance of 12,570, which applied to this tax year, leaving us with tax being paid on 28,403. You can then see how tax is calculated. It's all at 20% there, but there'll also be a charge for class 4 national insurance down here because my profits are over the threshold, and then 158 quid for class 2 national insurance. Okay, so that's how you'll get the more detailed breakdown. Save and continue. You're given an option to save a copy of your return or print a copy of your return. And then finally, you just need to make a declaration that you've declared any coronavirus support payments, that all the information is correct. Um, if you click on submit, I'm not going to, it will then take you through to a page that will ask you to re-enter your login details. Once you've done that, the return will get sent across to HMRC. Take a note of the submission reference that comes up on that screen. It'll be a long combination of digits and letters. But if the return goes missing between your computer and HMRC, then that's what they'll ask for. So it's good to take a screenshot of that. And then that's it. You just need to remember to log back in after 72 hours and actually make a claim for the repayment. That was how to maximize your tax refund as a CIS worker. I hope you enjoyed that. I hope you found it useful. If you did, make sure you like and subscribe. Thank you all for watching. See you next time.